Hello, if you're having trouble reading the cover of the Keppel Corp annual report, let me help you out. That says agility, and agile is exactly what the conglomerate needs to be in order to face the headwinds into 2015. Already 2014 was a difficult year, the company said ahead of the annual general meeting, because of various headwinds. But being a conglomerate and having a diversified area of investments obviously means that while some things are up, others are down. And so hopefully overall, in the medium to long term, it's able to ride out some of the volatility in the short term. So let's go through this document to see not just what happened in the past, but obviously also how this diversification allows them to ride the waves. The irony is that some analysts out there say that Keppel Corp ought to be trading at a discount because it's not focused on any one particular business. And we'll hear the response from the Chief Executive, Lo Chin-hua, about that shortly. First, let's take in the earnings, and you can see that here reflected early in the annual report on this two-page spread, where you'll see that the revenue for the year was up by 7%, and you can see that it wasn't quite back at where it was 2 years ago, but certainly trumped 2013. The profitability number also climbing back after last year's downer. That was up by 2%. In terms of where the revenue and the profit came from, we actually have to turn further back in the annual report to this page over here, where we can see, you can keep your eye on this particular pie chart, where we can see how things change as we go from revenue to profit. And now possibly what you would have spotted is that the big orange part, which is the offshore and marine part of the business, generates about 2/3 of the revenue, but only just over half of the profit. The real profit driver is in fact that light grey shaded area, which is property. Property is a tad volatile, as we will see in a moment, but that actually really punched above its weight in terms of profits, and you'll find out why in just a few moments. On this chart here, we can see also in the annual report, you just have to look for it, you can also see how the revenue numbers for property, which is the third set of bars from the left, as we change from revenue to profit, bang, there it goes again. Profitability really substantially above what the revenue numbers said. And even though in 2014, the orange bar, that was way below offshore and marine, you can see just how much of an impact the property business has on Keppel Corp's overall earnings. And we'll reflect on the impact on that for shareholders again in just a few moments. Let me take you through some key numbers. This is the offshore and marine business. You can see that revenue, 8.5 billion, net profit just over 1 billion. And as we switch the chart to the next ones, you'll see infrastructure in maroon, property in yellow, and investments in green. Again, as we switch from revenue to profit, you can see just how important it is to look at both of those numbers, not just one, and also the importance of the diversification for the group. I found the interview with Lo Chin-hua a very good read. The questions that were asked, which you can read on the left side of the page, certainly didn't mince words and touched on the important issues, as did his answers. One of them, obviously, is very much the price of oil. And you'll see this throughout the document, that because the price of oil had halved in between annual reports 2013 and 2014, that obviously has a big impact on various parts of the business, not least offshore and marine, because for as long as oil prices are low, that means that the oil companies are not likely to invest in the oil rigs and other vessels that Keppel Corp builds. And so there's a lot of time and attention devoted to the interview and also the chairman's statement by Lee Boon-young in terms of how the oil price is impacting their earnings. For example, day rates at which these oil rigs are hired are likely to remain low. On the other hand, we're seeing more and more oil rigs recycled, and that's what we see in this chart on this page. Now, without looking at the numbers specifically, you can see the trend that generally speaking, there are more oil rigs, drill rigs, vessels and so on being recycled because it's simply too expensive to refurbish them and then put them back out into the seas at a time that oil prices are so low. So the fact that there are more of these vessels being recycled, that should in turn create more demand for the rigs that are still out there, and so hopefully see those day rates reach an equilibrium. Now, that doesn't necessarily mean that they're going to go up in a hurry, but at least it should indicate that there should be some sort of bottoming out of those day rates. There's also significant discussion in the interview with Chief Executive Lo Chin-hua about Seat Brazil, one of their big customers in South America, which seemingly is having some trouble paying for the oil rigs that it's ordered. There are 3 of them in various stages of completion, the most complete one at 85% of completion. And according to the interview, about November time frame, so what's that, 4 or 5 months ago, was the last time that they got payments coming in the door. Now, what you'll see, or what you'll read in the interview, is Chief Executive Lo not worried at all. He says there have been some delays in further payments, but we do not expect Seat Brazil to cancel their projects with Keppel, considering the significant progress that they've already made in terms of the construction of these rigs. He goes on to say that their order book is mainly filled with established customers who've already made substantial down payments for these rigs. And it would not make sense, this is the part I like the best, it would not make sense for any of them to cancel their projects with work progressing well on track, because, as we read further along, if they do defer their rig deliveries, they may have to incur additional costs. So, in other words, even if there are delays in further payments and therefore delays in the delivery, the price tag is only going to go up. There's also quite a bit of discussion in the annual report as we turn to this purplish coloured page referring to the power generation assets in Singapore. Now, we looked at this with the Sembcorp Industries annual report as well. They had the same issue. There's an oversupply of electricity, even though electricity rates, or rather consumption, keep going up. So there's quite a bit of discussion about this also in the Keppel Corp annual report, where they say the oversupply in electricity is likely to be sustained and weigh on the market in the coming years. So no short-term fix in sight. Having said that, they are looking to sell part of a share, a 51% share of one of their power generation plants into the Keppel Infrastructure Trust, merged with the CitySpring Infrastructure Trust. And in addition, there's other good news to report, at least when it comes to the waste to energy, the WTE plant. They've been pre-qualified for a tender there. And their Sunoco WTE, waste to energy plant, is going to undergo upgrading between the third quarter this year, that is 2015, and the third quarter of 2016. So again, there's that diversification of the portfolio coming into play, where the electricity prices are likely to remain subdued. They are expecting more customers, non-industrial, so more residential customers should be allowed to choose where they get their power from, not just SP services, so that should be good for Keppel. On the other hand, they're seeing some good news in the waste to energy business. Property, similar story. Now, we know that there have been cooling measures for both the property markets in Singapore and China, but Keppel Corp is diversified throughout other parts of the region as well, which I don't really have time to go into at the moment. But if you read the annual report, you'll see details of some of their developments in Myanmar, Vietnam, and elsewhere. In terms of the outlook in Singapore, they say 2015 is expected to be another challenging year. The growth obviously uncertain with the issues in the Eurozone and Japan. And as the government is unlikely to lift the property cooling measures soon, the residential market is expected to stay subdued. So, once again, there's the downside. Wait for the upside. Here it is. The Grade A office market is expected to enjoy robust rental growth this year on limited new supply. And that was also something that we read in other annual reports in this AGM season, that yes, cooling measures are in place, but we're just not seeing a lot of office supply. I think it's until the second half of 2016. So there is quite some time for rents to rise. Let's talk a little bit about what I started off with in this segment, and that is talking about what the analysts have to say. Chief Executive Lo has asked whether there should be a conglomerate discount applied, as some of the analysts seems to suggest. Mr. Lo says that the strong performance and earnings visibility in the current climate suggests that the conglomerate discount applied by some analysts is unreasonable, and he points out that the performance and dividend distributions have been consistently strong. One of the areas that he highlights that investors and the market should look out for is the so-called RID, which refers to the recurring issues, for example, impairments, divestments, and so on. Now, these RID numbers, in other words, these tend to be one-off issues that are then booked, but in actual fact are of quite some benefit to the market, because when there are revaluations, impairments and divestments, that impacts the bottom line virtually every year. So yes, they are one-off, but they're having these one-offs throughout the last couple of years. And so therefore, in Chief Executive Lowe's terms, shareholders shouldn't see these as one-offs. In fact, they are part and parcel of their business from which they pay dividends. And you can see that in this final chart that I'll pull up here, which shows you how those dividends have performed. What's noteworthy is not just the line at the top, but also that they've distributed other assets in specie. That is, you get shares as shareholders in other parts of the Keppel business as they divest them as part of the dividend payout. It's a fairly lengthy annual report, almost 250 pages, but as a shareholder it certainly pays you to read it, particularly because of the diversified nature of Keppel Corp, therefore the somewhat more complicated nature than we've seen with other companies listed on the Singapore market. I commend the report to you, AGM or not. It's always something that shareholders should have a good look around in.